Welcome traders to Let's Trade Futures and Option channel. Today I'm going to talk about a unique strategy. Risk of 220 bucks and you can secure $700 dividend for next 7 quarters. Plus like a leap call where you have the upside potential for the same stock. And I'm talking about JP Morgan Chase stock. Before that, a quick disclaimer. As always, remember to conduct thorough research and consider your risk tolerance before implementing any trading strategy. I am not recommending or I am not giving any guarantee on the outcome of this particular strategy. I am just sharing my opinion and my trading style. Let's look at the JPM dividend history. Every quarter, approximately $1. So annually we are getting around $420 dividend over here, which is approximately 2.15% dividend yield. And the upcoming dividend date is 4th of April. So this is the right time to implement this strategy. If you own 100 stocks of JPM before the X dividend date, you will receive $115 in your account as a dividend. Let's review the 1-day graph for last 5 years for JPM. Currently we are at around 252 weeks high. And the stock had a support at around 138 and 128, between that range. The lowest value for the stock in 2022 is around $105. Now we are at the 52-week high. So if you are bullish on JPM and you buy 100 stocks, you are at a risk. If for any reason if market comes down and it comes around 170, you will still lose around $3,000 on 100 stocks. If you buy a leap call, and I will show you the how much you have to invest for that. If you buy a leap call or this JPM goes down, you will still lose value for that. So I have around 2 strategies. Let me explain you both the strategies one by one. Now look at the option chain for JPM. Let's say I'm looking for a leap call. And when I'm saying a leap call, I want almost like 660 days. So Jan 26. Let's say I'm bullish on this stock and I'm expecting that the stock will be at around $250. If I assume that I have to pay almost around $900, that's my investment. But if the stock is not going in my direction, when I'm bullish on this, I will lose money. Plus, I will not be able to secure any dividend for this particular stock. So what are the options we have? Option number 1. First, go ahead and buy 100 stocks of JPM. After that, go to Jan 2026 option chain. Now look at the option chain on the put side. At 250 strike, because we were planning to buy a leap call at 250 strike. So let me look at the 250 put strike. I will buy a put at 250 strike and let's look at the combination how it looks like. Now let's observe the combination what we have selected. If I would have just bought 100 stocks. Till I keep the stock, I will secure the dividend. On top of that, I have full upside potential. For any reason, if the stock is at 220, I will be getting $2,000 profit. But unfortunately, if the stock is down to let's say 180, I am losing $2,000. So how can I secure this? For that, we bought a put at strike 250 and we paid almost $5,275 what we have invested. Now if you look at the graph, our maximum risk is 221. I still have the upside potential, limited, but I do have upside potential. Now in this combination, depending on your account type, if it's a margin account or if it's an IRA account, you will need around $26,000 of investment. $20,000 for the stock and around $5,275 to purchase this particular put option. So by risking $221, I have the upside potential. Plus I will secure the dividend for almost 7 quarters, which is around $700. Now let's evaluate what will happen after 1 year. So March 2025, let me go there. So on this date, let's assume that the stock is at 240 bucks. My maximum profit is 792 plus the dividend what I receive for the 4 quarters. So if I assume 4 quarters, so 400 plus 792, almost around $1,200. That's the profit what I got on this stock. And my risk was only 221, but I had the full potential to keep my secure my dividend for next 7 or 8 quarters. Now let me show you one more combination. For example, let's say if you don't have $5,275 to purchase this particular put option, here is a different combination, and after that I will show you the risk analysis graph. Go ahead and buy a put at strike 250 and sell a put at 195. Now your investment is only $3,400. And now let's look at the graph how this will look like. Now in this configuration, we bought a put at 250 strike and we sold a put at 195 strike. Our investment was 3,000, almost around $3,400. Now look at the risk graph. I have 100 stocks of JPM so that I can secure the dividend for next 7 quarters. Then I have this vertical put. In this combination, if you see here, yes, my upside potential got limited up to $250. At the time of expiration, if the stock is at 230, my maximum profit will be 1770. If the stock falls and let's say it goes below $178, at that time I can close this put combination in profit and I still own the stock, but now my break-even price is at around $178. So that's the beauty of this particular strategy. And if the stock is above $250, yes, I still have the upside put. You are able to secure the dividend for 7 to 8 quarters, plus your risk is very minimal, and you still have the upside potential like buying a leap call. If you buy a leap call and the market goes down, you will lose the money because the delta will be very high at the money, or even if it's out of money, it may be delta 30 or delta 25. So in this strategy and in this combination, you can secure the dividend with minimum risk and still keep the upside potential. I hope you like this particular strategy. Please let me know in the comment section if you have any positive or negative comments. If you found this video helpful, be sure to give it a thumbs up and subscribe for more trading tips and strategies. Until next time, happy trading.